Oh, trust me, I'm well aware that we're getting a slap from the markets. Let's have a look at Adobe and Oracle and see if we can find any special strategies around some of the ones which are big stocks, which have been on the approved filtered list. They've ticked all the boxes. Obviously, not going to go bankrupt. Nothing like that. What's the opportunity here? Well, I want to start off with Adobe, and I've taken it back. Basically, it's trend growth. You can see there. You can see the price going all the way back to 2013. Okay. Now, the danger at the moment, I've marked in yellow that the momentum drops. It gets into uncharted territory, the likes of which we've not seen, and it just drops off and continues falling to point A. And there's two red lines which I've drawn as just estimates of what could happen. Do I think that's likely to happen? No, because the growth trend that's been in place for nearly a decade would have to end. I don't see that's justified on the fundamentals. Okay, you'd be talking about a stock which has gone from 700 to 300. You're talking about a 60% drop. For what reason? It's really not there. So I can't see that happening. So what's the more likely scenario? The more likely scenario is, and I think this is sort of 75% likely, and the point A is 25% likely. The 75% probability is what you see there. You see the price has hit the lower two standard deviations away from the average trend. The average trend is the solid blue line. The two standard deviations is where it is, and you can see in the past it tends to kiss the lowest two standard deviation or the upper two standard deviation, then tends to sort of bounce around it along the growth trend. Okay, the theory being that companies grow at a certain rate and they continue growing, and the share price continues going up over that period of time. And sometimes the market overreacts, gets overconfident, and then pulls back. So it goes to the upper confidence level, let's say the two standard deviations away from its average price, and then falls. Okay, it's a theory, it's not guaranteed. The past is not a guarantee of the future, but it is some indication of a possibility or a probability. So what's more likely? Well, we settle into where we are now, move sideways for a bit, and then eventually it continues on that trend growth from where it is at the moment. So why would you have it in your portfolio? Well, there's a couple of reasons you might have. You might say, you know what, I got in near the top and it's fallen off, and I just want to keep holding on to it because I think it's a good company. I don't want to swallow that loss. Strategically, I think it's a good company. Right? That's why you might do it. Would you go into it now? Well, if it's not on the approved filtered list, then I wouldn't today, even though it looks like it might give us a good growth. But if I'm already holding it and I'm facing a loss, it's one of those companies which is so good, so solid, and if I didn't want to take the 25% drop from the peak or from when I entered, then I might say, well, actually, it's still solid, sound, fundamental company. I've done other videos on the solid, sound company, and strategically, is it one that I'd want in my portfolio? Historically, there really isn't negative information about it going anywhere. The one thing that I'd say to you is look at this from July 2014 to, 2016. You can have 18 months where it goes sideways. And you might say, hang on, Alpesh, this is going upward sloping. I can see that with my eyes. And yet you just also showed me that in an upward slope, the same thing can go sideways for a prolonged period of time. Yeah, it can go from its upper confidence, two standard deviations at the top, to two standard deviations at the bottom, and that can be 18 months. So I want you to bear that in mind. Sometimes people find that confusing. Wait a minute, it's a growing stock, it's doing well. Why is it going sideways for 18 months? Because it's gone from arguably an overvaluation to an undervaluation. That'll take the longest time. And you might even say, hang on, Alpesh, it's even longer than that. It's maybe 2 years it's taken to go from one to the other, and then it's gradually gone up. So the thesis would therefore for you have to be, yeah, I like the company and I appreciate that it might go nowhere for 12 months. I can't time that, but it's one that I want in my portfolio for a longer period of time. So that becomes a special situation because that's obviously not the Great Investments Program, which is hold for 12 months, has to be in the approved filtered list. And if it falls. So I don't mind people doing rules based on, well, I'll hold it for a longer period of time. Overall, looks, sounds solid, isn't going to go anywhere. I looked at the figures. Sure, sometimes they're not, every single figure isn't fantastic, but I like holding it. and it becomes part of your portfolio. So I'll give you an example. PayPal for me is like that. Okay. So I wanted to show that one. The next one I want to show you is Oracle. Now, if we look at Oracle, what do you see? Again, similar kind of thesis. There's the average growth trend line. You can see how it's gone from 40 to 80 in the space of what is that? Since 2017 to 2021. So in 3 years, it gave you 100% return. So I've drawn this from 2011 just to show you the broader growth. What can the company do? And you can see there are prolonged periods from July 2017 to pretty much July 2020. So for 3 years, it went sideways. Hang on. In 3 years, it doubled, and in 3 years, it went sideways. And yet you're talking pretty much about the same period of time. Yeah, I mean, look at it. It's in front of you. So what does that mean now? Well, several things. First of all, it means you can have good quality companies which can give you 100% return, but might go sideways for, as I said previously, 18 months to 2 years. So it doesn't fit into the great investments program of itself, because it would mean holding for a longer period of time, which you might be willing to do because you say, look, I see it's falling. I don't want to get in right now, Alpesh, because, my God, it's not in the approved filtered list. And from what you're showing and the momentum and everything else, it could have further potentially to fall. So I don't see the special situation being get in now. But let's say you already hold it and it's fallen off a bit. Well, you might say, you know what, I don't want to get out at a 25% loss from the highest it's been since I bought it, because actually, solid company. And yes, I know it might fall back a bit more, but I'm willing to hold this for 2-3 years. So do you see how, if you're already a holder and you don't want to get out, you might elongate your time frame? But if you're not a holder and it's not in the approved filtered list, then you wouldn't get in. Okay? So that's the two ways to look at it. And hopefully that's helped to clarify rather than confuse. But yeah, I hope you found that useful and the way in which I've done the analysis. Thank you very much indeed.